I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, while I was locked down the previous week as Hurricane Ian hit here in Florida with power, cable, and internet down, investors sold stocks aggressively, only to turn around this last Monday and Tuesday as the S&P vaulted 235 points from that low in just a couple of days. And we were expecting a low to come in the stock market around that time. Economic data worldwide showed weakness, especially in the UK, and so bad that they reinitiated QE. The pension funds there were in huge trouble as there were margin calls, and this is the big leverage that had occurred over these decades really coming home, and the bond market was in collapse there in the UK. That brought huge volatility into the pound, which jumped up very quickly as the act came from the Bank of England, and then it moved down again. And there is tons of confusion, and the stepping on the brake and the accelerator at the same time is just something that is not going to work there in the UK. So there is more turmoil as Prime Minister Truss took huge criticism and then rolled back part of that policy, and the UK plainly is in big trouble. Then RBA in Australia only raised by a quarter point, and that had investors believing that all the central banks around the world were about to pause, slow down, pivot. But that was not to be had based on the news that came out later in the week. Wednesday, some morning selling came as news came out that Musk had decided to go back to his original Twitter deal and buy that stock. So Tesla was under pressure under the assumption that he would have to sell some Tesla stock in order to get the money to do that deal. And then OPEC Plus, they cut their production by 2 billion barrels a day, 2 million barrels a day. And then President Biden answered that by saying, I'm going to sell more out of the SPR, which is bad news. It's price manipulation that never works and that weakens the U.S. Security. And they say that they were sure to buy back oil lower. Well, in the meantime, oil has been exploding to the upside. A huge gain here on Friday, and it's had just a big week. We should just let OPEC make their mistakes, let the market sort itself out, not get in the way of that. But that's not what we get right now, and the buyers are back in the oil market, and that is a situation that we have to really watch pretty closely here. Thursday, there was a very choppy market as everybody was waiting for the employment numbers to come out. So the market was really moving back and forth quickly. It was a lot of fun shopping that market. Fed heads came out very hawkish. Kashkari came out and he says there's quite a ways to go before they're done. Evans came out and said, well, Fed funds are likely to hit 4.5, 475 by spring. And S&P 500 moved down about 40 points on Thursday. But that weakness was just foreshadowing what happened on Friday. The employment numbers came out slightly hotter than estimated. Investors were very disappointed, and the S&P 500 moved down over 80 points as they are here now at midday while we're doing this show. Bonds moved down sharply again. The dollar moved up, and hopes for that pause, pivot, were deflated once again. Also on Friday, AMD warned that they're seeing a lot of slowing, and the same thing for Samsung, who reported earnings. They were a big miss, and they said demand is also coming down sharply as PC demand is slowing, and Apple also moved sharply to the downside, down over 3% now on the day on Friday. And Apple's become quite a volatile stock. I've been trading it a lot lately, and that's been, really good trader. The stock market, well, it is in a doom loop. That's thanks to the feckless government leaders and Fed leaders who believe their role is to save us, no matter what the cost. Well, we're seeing the costs now. Simply, there's no way out for them. That's what the doom loop is. No matter what they do, they're wrong. And we lose, as will be reflected in the markets. Peak debt is actually here. You could see that in the UK as they try to take out more debt to save the pensions, and then the gilts collapse. And the same thing here in the US. I mean, you just can't take on more debt. The consumer is not willing to take on more debt. What are you going to go to 120-month auto loans? I mean, it is ridiculous. So now the central banks must choose. Any hint of a pause or a pivot, and commodities are going to move sharply to the upside. This is just the continuation of what we've seen over this last year as the inflation numbers have hit. Silver, metals, oil, they all jumped as they got some sense that, or hope in the markets that the central banks were going to pause, and we're likely to see that every time that there is a hint of that. So that's really unlikely, and they have to keep rates high and have a recession. And we need to see the unemployment rate up 4.5%, 5% or higher, and they're likely to go for that. So the choice is clearly a recession or inflation. There's your doom loop. It's not going to go away. That won't go away for a long time. Everybody has hopes, and you hear that all over the place, that comparative inflation numbers are going to be much better as we move forward, and that may be the case. Maybe we won't have 8.3% inflation. Maybe it'll be 6%. That still won't be enough to get the Fed to stop. So clearly, they are choosing recession, and they're likely to move those rates up on the Fed funds up to 4.5% or higher coming in 23, as we hear a lot of those Fed heads talking about. I'll show you later in the show when we look at the stock market. I think the market is in a temporary bottoming process right now, and that may test these lows that it recently made. And overall, I think the overall upside, which we're likely to get into Q1, I'll show you that. Those are very limited upside gains that we see. So those targets in SPY, well, not as high as probably a lot of people would hope. This doom loop has stocks in a lot of risk, and after some attempted rallies, which we have believed all along we would see in Q4, then I think into Q1 23 is going to be lots of problems for the markets. Here we are at midday, and the major indexes on their lows for the day. They're up between 1.5 and 2.75% for the week. Believe it or not, up week after what we've seen this big down day here. And Russell the best, interestingly, everything was much higher. Then S&P was up 6% earlier in the week, and now, as I say, only up about 1.5%. Bond market 30s, they are down 1 point. And it was up 3 points. So that was a big reversal. The 10-year yields now up about 10 basis points to 3.90. Gold market, that is up about $35. It was up $60 as this hope for a pause really got into the metals, as silver was up $2.50 earlier in the week, now up about $1.20. So there you go. As just a hint of some pause, and you got the metals moving up sharply. Silver from trough to peak just in the last few weeks was up 20%. That hopes for the Fed pause. Anytime you hear any of that, watch these commodities, because you're going to see that there are big upticks in them, and that's why inflation is embedded, not going away so quickly. As a matter of fact, when you just a little side note on that, when you look at the major companies out there, there's no big cutting of employment going on yet because the employment situation is still very tight. They don't want to lose their employees until they get forced to. And of course, sometime in here, the Fed is going to force them. Dollar, small gain, was big down as the hopes again for the pivot had the dollar weaker, but not to be had. And oil market, massive upside move. Absolutely insane. We haven't seen a move like this in ages. It's now up about $12 on the week. It's up 4.3% today, trading up at 92.30 right now, and it was down under $80. So just a huge move there. However, we think it is in resistance, and once this panic buying is over with from this OPEC plus move of cutting oil production, we think in Q1, when there's real talk about recession going on, that we're going to see oil sub 75 again. So make sure you watch our Future Speak show on Wednesdays when RV brings you all of our analysis in 24 different futures contracts and indexes. And you don't want to miss that. That's for level 2, 3, and 4 members. So just great stuff on that Wednesday video. Coming up in this show, we've got some great stuff for you to see. But first, I want you to know that I will be speaking live this Wednesday on the 12th of October, 10 a.m. I want you to sign up for that. Now, I'm going to send out an email again to our members on this, or if you're watching this on YouTube, we'll be posting that link, and you'll be able to watch me free. And also, from the 10th, there'll be 50 speakers or plus. All those big names that you know will be speaking. This is an amazing event. So you can sign up for this special event and hear me speak on this Wednesday for no cost at all. And just use the link on this post or in the email that I sent. I'm going to be presenting on the U.S. stock market through the year end and beyond, and you're going to absolutely love what I share with you. So do attend that event. Do use our link to sign up for that. Coming up in this show, Arby's going to show you a preview of Future Speak. Those of you that are not level 2, 3, or 4 members, you wouldn't have seen this. For new people, you get a great idea of what we do. And you're going to see multiple time frame analysis in natural gas, which he shows you is bottoming. Katie is going to give you a great look at how to use the Tastyworks platform, just a great options trading platform. And she's going to do our new segment, Trade Planning with Options, that she brought to our level 3 and 4 members. And this is cycle analysis. And she's going to show you doing a bullish option strategy in GDX. She's picking one out. There are many strategies you can do that she shares with our members. And I'm going to bring you a stock market intermediate view of the SPY. This is a review of the weekly chart, and I'll show you cycle patterns and projections, and you'll see the intermediate bottoming process is on, but there is work to be done. That's what's coming up in this show. Please do go to our website. If you're brand new, sign up for that level 1 $10 deal that we're going to show you. You can get all of our analysis on these indexes every single day for just $10 for a month. Special deal. On YouTube, subscribe to this channel, click the notification bell, and like the video. Give us a thumbs up. On Twitter, follow us at askSlim. And any questions on our memberships, any information that we share with you on our huge offerings of education and analysis, I want you to write to Matt at askSlim.com. He responds quickly, and you will love the information he sends to you. This is a preview of a video of natural gas. RV is going to bring you Future Speak, one segment out of 24 different symbols that he does, and he's going to show you the natural gas bottoming process, which we believe is on right now. And for the full video, 24 different futures and indexes, become a level 2, 3, or 4 member.
This is probably one of the more interesting setups we are going to really look at in this whole show here. In NG, we have the same cycles we've had for really many months at this point. We have a dominant cycle broken up into minor halves, then broken up into minor quarters. NG is selling off right in line with this minor half right here. You can see we are showing that we're trying to form a low right here and get into this next rising phase on this minor half. So this is a very interesting opportunity here right now in NG. You can see we've had a sign of basing that's happening here. You can see right here we had a little bit of an inverted head and shoulders with the left shoulder head and then right shoulder here, and then we actually broke out and then turned up. Something similar is starting to happen here in NG. See if we get a nice base that forms here, and then we can turn back to the upside. But it's acting fairly nicely right now in NG, and we are watching for this to turn up as this dominant daily will push up, this minor half will push up in addition to that minor half on the weekly that I just showed you. So this should be a period of time where we can get a decent impulse higher in NG. We're holding that 78.6 at 625 very nicely, clearly indicating that there is some buying as we are getting down into this $6 area, looking for this to turn back up and get into the zone from around 775 to around 870-ish. So in that zone looks really quite reasonable on the upside as this base is likely forming in NG. That daily low is due 10.3 to 10.14. Okay, so need to watch to see this form that base. And if you're a shorter time frame trader, you want to be looking at hourly charts, in that time frame, so you can start to see that upturn here on the shorter time frames to really confirm that a key daily low is formed. That's what we'll be looking at with our members on Discord, certainly.
All right, good job. Do make sure you become a level 2, 3, or 4 member to see that full video. This is trade planning with options. Katie does fantastic work on this. So she shows you analysis in the GDX market, that's gold miners, and she's going to present an option strategy to you that you could do that is bullish, that you could also learn other things that she does in our Discord channel for level 3 and 4 members, where she brings a lot of different choices to the strategy. You're going to love her analysis as she presents on the Tastyworks platform.
Hi, I'm Katie with askSlim. This week I recorded a video for our level 3 and 4 members called Trade Planning with Options. I highlighted a potential opportunity that may be setting up in GDX, which is the VanEck Vectors Gold Miners ETF. GDX is found here on the cycle low timing tracker, which indicates that it is in a period of time when we expect the current weekly cycle in GDX to form a low and begin to move up into the rising phase of the next cycle. It is also found over here on the right, and that indicates that there has been enough positive price action in the daily time frame to trigger the bottom confirmed algorithm for that time frame. Let's go and take a look at the chart. This is a 5-year weekly chart of GDX. On the bottom, we have black cycle brackets that are 43 bars in length. Those represent the GDX cycle. We also have a gold dashed cycle bracket that represents a shifted cycle on the weekly chart in gold futures. These cycle brackets are simply a drawing tool that helps us identify average cycle lengths. These purple vertical lines show where the actual cycle lows occurred relative to the ideal. These blue vertical dashed lines on the right show a period of time of a few weeks around the ideal cycle low when we expect the current cycle in GDX to form a bottom and begin to move up into the rising phase of the next cycle. You can see that we are currently in that time frame. If the current candle holds up through the end of this week, we'll have seen enough positive price action in GDX on the weekly time frame to trigger the bottom pending algorithm for the weekly chart. And we'll see GDX in that category of the cycle low timing tracker next week. Over on the daily chart, you can see the price action that triggered the bottom confirmed algorithm for the daily time frame, and now we have been consolidating sideways for a couple of days. We have this support zone here in green, at the top of which is at 24.36 and the bottom at 23.27. If GDX can pull back into that zone and hold that zone, we would consider it a good long side setup for a move back up to the 78.6% bib at 26.11 and to the prior cycle peak resistance at 27.58. That's our initial target zone. Failing to hold the support zone would have us reevaluating the trade idea. Let's switch over to the Tastyworks platform and I'll show you the option strategy that I demonstrated for our level 3 and 4 members, which corresponds to the analysis. This is the Tastyworks platform. I'm going to go into the November monthly expiration, and the option strategy that I'm going to demonstrate is called a zebra. It's basically a stock replacement strategy. It uses less capital than purchasing 100 shares outright. Now, because this is a long side trade idea in GDX, we're going to use calls. The first thing we're going to do is look for the call that is closest to the 70 delta. The Tastyworks platform is extremely versatile, and you can set these columns up however you like. I have a delta displayed in this column right here. At this time, the closest call to 70 deltas is the 24 strike, so I'm going to purchase 2 of those. Next, I'm going to look down here and see how much extrinsic value I'm purchasing in those 2 calls. It's 190. Now, because extrinsic value is just value that will eventually disappear as we get closer and closer to expiration, we do not like to buy it. So I'm going to sell a call and collect some premium with the goal of wiping out that extrinsic value. I have extrinsic value shown in this column, and the number that is closest to the extrinsic value that I'm purchasing would be right here. It's usually around the 50 delta, which is the case right now, and I am going to sell one of those 26 strikes. So we have to pay a debit of $3.65. That's our max loss as well as our capital requirement to place the trade, $365. We have a probability of profit over here at 44%. We're picking up 87.44 long deltas, and we have to pay a daily theta of about $1.55, which is a half of what we would pay by purchasing just 2 calls. Let's take a look at the risk graph. Here's the risk graph of the zebra. Notice that the profit zone earns approximately 1-to-1, just like stock. But unlike stock, the downside risk is capped at the debit paid. Now, of course, because GDX has not yet gotten into the entry zone for this trade idea, the strikes will be different at that time. If GDX does get into that entry zone, we'll be following up on this trade idea over following weeks for our members. To learn about all of our tools and services and check out our trade ideas, please visit our website at askSlim.com.
All right, become a level 3 or 4 member to be able to see her full analysis on that in our Discord channel. Stock market, S&P 500. See the big picture projections on the stock market that I'm going to bring. Not only what I'm going to do right now, all you have to do is sign up free for the Wealth 365 Summit. Here is the information. I'm going to present the U.S. stock market through year end and beyond, and that's Wednesday the 12th at 10 a.m. Eastern Time. All you have to do is sign up for the free link on this posting or that we send you in your email if you're a member. There are 50 great speakers in 6 days starting on Monday, and I speak again on Wednesday the 10th, the 12th, 10 a.m. Eastern Time. You want to see my big picture analysis on the stock market? It's been incredibly good this year, and I think we're going to remain that way for the rest of the year into the beginning of next year. So you're going to want to see that, so please do use the link that we're going to put on the posting here on YouTube or on social media, or if you're a member, we're going to send it to you in email. All right, stock market, SPY, intermediate view, 1 to 3 months. And you'll be able to see the full analysis if you use our stock index daily snapshot, SIR daily snapshot, for all the full analysis on all the charts that we present and all of our momentum indicators. So I want to make sure that you do go to sign up for our special, which I'll show you in a couple of minutes. So this is the stock market looking at SPY. All right, this is the SPY chart. I know it's busy. A lot of you that are new maybe would say, wow, how do you read that? Well, I'm going to show you right now. What you see on the bottom here are cycle brackets. These are the energetic movements in the markets. It's essentially money flows. And we do this kind of work with observational, visual type of analysis. And down on the bottom here, these cycle brackets are not really the cycles. They are just the energies that we look at. And you can see how the cycles actually set up right in here. This dash line, we just put in here new, and this is per Katie's analysis that identified a 36-week cycle in there that actually bottoms out over here in this first quarter, late in the first quarter, like we believe these other ones do also. These yellow ovals in here are periods of greatest risk, and there's another one out over here in the first quarter of next year. Let's take a closer look in here at what we were looking at. First of all, I want you to see this cycle in here and nested area. In other words, there are two cycles coming down in here that brought this big selling back over here last February. We had another one right in here. We thought that this would fail and then move down into this time frame. And you can see what's going on now is that there's a bottoming right in here that we believe is happening. And that bottoming process is likely to cause a rally to come in here as these energies in here begin to give you an upward bias. In other words, we think that it's getting sold out in here. Now, the support in here is at 357 on the SPY. We're looking at a weekly SPY right now. And if it would come down here and tickle out this support right now, it wouldn't be that horrible. It would just be part of what we think is a bottoming process. If it would do it further out over here in time, that would be big trouble for the stock market, because once this rallies in here and then breaks down under that level again, we will be entering into this final, what I think final for this bear move, and with a ton of risk, and it could go much, much lower. So for the intermediate term, and let me just blow this up again a little bit more that you can see it in here, what we're looking for is this bottoming process going on. This inverted hammer or shooting star over here does happen at bottoms often, where the buyers come in, they get disappointed, they spit it out, and the buyers come back in over here, and that could certainly happen. So we expect that this is kind of a choppy period in here and begin to get some rallies. We had all along, even way at the beginning of the year when we did our January show, talked about the big risks being down in through the third quarter. And when we did our intermediate analysis, we thought it was risk out into early October. And then you get into a period of rebound in here. So this is now remember, we're looking at 1 to 3 months in here. So what we want to look at is, what is the minor cycle in here and how high could it likely get up here? Well, being that it already got up to about close to 380, this first resistance here at 385, I would doubt that that would hold once they did start to rally. Probably more in this area of the middle of this resistance at 394 to about 396. Would be what would stop this first upward thrust that we would likely getting in here, this impulse period, and then get a pullback over here into December. We talked about weakness into December. There are a lot of stocks that have weakness into December. And we think if this rally came, the sell-off would not take out a new low. That would mean that we think we're making the lows for this year now. Then there'd be another rally out over here based on the minor cycle, which take you up maybe to about 410. Now, if this rally came and this sell-off came and broke 357, then this projection would be much lower. that would not go to a new high. The likelihood of that would be very small. So the key is, how high does this get? Right now, we'll say 394, 397 is kind of likely where it gets out over here into November, and then a pullback that does not make a new low. This is the greatest likelihood. And then one more attempt out over here into the beginning of the year that may get it up as high as 410. That would be I think a reasonable place to be looking for a major failure if it did act that way. And then giant risk out over here, February and March of next year, where we think that there will be another free fall like this or worse in that time frame. It could easily go from around 410 to 350 or 320. So we'll have to see how this sets up first to be able to project out over here. Right now, as I said, for the intermediate term, we're looking for a bottoming, an attempted rally up here, maybe 394, 397, a pullback, another rally in here into the beginning of next year. That's really our 1 to 3 month view on the stock market, S&P 500. So we think that people have capitulated. We think that the buyers are likely to be coming back into the market, and that would be another attempted rally like the 5th or 6th that we've seen in this bear market before the final big move to the downside, we think, then comes. So that's it for our look at the SPY. Remember that you can get our full analysis, all of our charts, weekly, daily, intraday charts, all of our momentum indicators every single day, updated to you, for you, and for your trading. This is great for active traders in the S&P 500 and the NASDAQ. All you have to do is give us a try. This is the last 3 days. It ends on Sunday, this $10 deal, special deal. It's unbelievable that you get all that for $19.95 anyway, or $45 for 3 months. Try us out if you've never done that before. Become if you're a free member, then step up to level 1. You'll be able to upgrade for just $10. You'll get the stock index report on all the indexes with all of our charts, projections, and key levels. You will also get our Slimulator momentum tracker for investors and position traders. Over 1,000 symbols, all built with our algorithms for directional bias and momentum. There's a chart in there that shows you how great this stuff is to see the longer term trends. You'll get our Spider Select ETF weekly review. It's once a week on the key sectors, and you're going to get great resources for trade planning with our worksheets and gain access to our Discord server for support. Go to askSlim.com, top of the page, and click the Learn More button, and you'll be able to sign up for just $10 for the next month. You don't like it, just cancel, and you'll have spent $10. Big deal, and you will see this unbelievably broad amount of information provided by Matt every single day. He does a phenomenal job on that. If you have any questions, write to Matt at askSlim.com. That's going to wrap us up for this show. Make sure you do go to our website and make sure you share it. Tell a lot of people about what we have and tell them to subscribe for $10 to all of the information you're going to get on a daily basis. On YouTube, subscribe to our channel, click that notification bell. Do like this video, give us a thumbs up, and watch the member videos in the playlist, and you get some good ideas for the things that we bring. Twitter, follow us at askSlim, and any questions that you have, write Matt at askSlim.com. I want you to be so careful. It is so unbelievably crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.